All right, live and recording.
This is Market Week Live for January 9th, 2026. Information and support for traders and investors. Welcome, everybody. A lot of people pouring into the room, and welcome to everybody who's watching this on YouTube on that stream, and anybody who is tuning in as at either the video or a replay on this. We're so glad that you were able to come in and take a look at all the great stuff that we have to offer. Coming up in this show, we're going to have our express round, and that's for level 1 to 4 members. They're participate in the Q&A. The floor will be yours, whether it's about our services, trade planning, chart analysis, trading issues. Glad to answer any of those. Also, if you have an issue with the services, you could just put it in on the chat, and we'll see if we can answer you there. Matt is going to review our services to you, and this is the final weekend of our holiday specials. You really want to take advantage of that. Matt's going to show you what that looks like. That's for Give the Gift of askSlim and the Amazing Day Trader. And I'm going to bring you the stock market analysis, S&P 500 and VIX. I'm going to do some unusual comparison, looking at what makes the rotation that's going on pretty apparent. I'm going to be looking at some comparisons and a different way to show you cycle analysis that I think you're going to find illuminating. I'll bring you the 70 evidence, probabilistic projections in price and time. And we will look at the MCM, our proprietary studies and analytical process. All of that is what you will get to see. If you're new to askSlim, well, go to top of the website. You can go to the free stuff and get SIR Lite. That's the free analysis that Matt puts out every single day on the S&P 500. Also, on that page, go to the bottom right, check out Slim AI. You have any questions about our services, what we offer? Slim AI, who is my virtual twin, can help you with that. On YouTube, subscribe to our channel, click the notification bell, and do like the video. Give us a thumbs up. And on X, follow us at askSlim. Again, any questions that you have, write to Matt at askSlim.com. This tells you about our, basically it's our legal, whatever we bring you, however it's brought to you, whether it's videos or oral, written, anything is for you to use in discussions with your investment advisors or whoever helps you with decision making. And if it's all by yourself, we do always encourage you to look at your own trading plan. You can go to askSlim.com at the legal and take a look in there, anything that you want to find out. This is our contact information. If you're a member and you want to do anything with your own membership, or if there's any website issues, you can write to team at askSlim.com. If you want to upgrade, take advantage of any of the specials that we have, then you can write there also. Or to write to Matt at askSlim.com on any questions on our content analysis or upgrades or first-time specials. Remember that this is the last weekend for our Give the Gift and Day Trader special we're running now. Our hosts, well, I've been around this, since 1974. In May of 74 is where I joined the CBOE, and I have been a trader ever since. There's not a lot of us left out there that can say that we can still do this and look at the markets without getting wheeled up to the screens. So I'm proud about that. Matt, you've been with me for a couple of decades, Katie now for quite a number of years, and everybody an expert in their own right, and everybody has a lead in what they do here at askSlim, and that's how we can bring you so much analysis, because we all play our part. You want to learn anything, please do go to askSlim.com, about askSlim, meet the team, and you can learn more about us there. All right, this is our Q&A. Remember, our level 1 to 4 members who have been given the link do participate in this. And we always do our best to give you the analysis on those things that you're requesting. I am the lead when it comes to the futures and when it comes to the indexes, and the rest of the team handles ETFs and the individual stocks. So there are no questions for me in the futures. How do you like that? That's a rarity.
I'm not sure that that has ever happened. So if anyone wants to
No.
post anything,
Yeah, so it's
here's your
that's okay.
chance.
I'll be glad to turn this over to the team. And there I see PLTR, Tesla, Microsoft, Apple, Oxy, Disney, and UNG and Bitcoin. They got me. So a UNG I don't have, but I do have natural gas and I do have Bitcoin. So I'll do those two, and then I'll turn it over to you. All right, so let's move into natural gas forward slash NG. Now, natural gas has been, quite volatile. It's been coming down here as there we go, as after a big upside spike on European demand in cold weather, it then began to move down again. If you look at the bottom in here at the harmonics, this is astounding and they're magnificent. It's a piece of art when you look at this because there are such gorgeous rhythms that are in here. And if you look at this and you understand cycle analysis, it tells you so much. It makes sense that during the periods where there are a convergence of cycles of different periods, there is selling that comes in. And you can see that here and here and here. Those are when all of them are coming down. So this downside movement here is right on time. It's not that it wasn't expected. Maybe the depth of it is stronger to the downside than I would have expected. But you see, we're getting late in here. This becomes a buy zone. If it gets underneath this level here at about 322, I won't be that thrilled about buying it until they, settle down and give me some sense things are improving. But here you see the weekly here as the momentum turned over right there. And we've been in negative momentum on the natural gas market now for the last month. And you can see that has not lied. It's really given you a good sense for the weakness in the market. So combine the momentum, combine the information from the cyclical rhythms, and you see why it's declining. Now, I see it as a buy zone, but we have to actually get some sign that it's bottoming for it to be a real buy. Here is the cycle patterns here in the daily chart. Now, I want you to see a few things that are important. During this period where the market turned weak on the weekly chart, it did so here on the daily. This is the reversal scout here. And the slim ribbon right over here, PO on the bottom, gave you these signals. And then right here, right where this was going on, it was giving you signals warning you of downside momentum again. And there it comes. So where are we now? Well, you can see that there's a convergence of cycles that comes over here into late February. So that says to me, if you get a rally in here, it's likely to fail and come down into late February. How does that align with the weekly? Well, there's late February right over there. So that's why I have the timing in here the way that I do with the low and the weekly chart likely to come out here into February. That aligns with the daily chart that says if you're a short-term trader and we get a rally here, what's the probabilities? It's likely to fail and then get down below these levels again. I'm hoping for some kind of a compound bottom in here where they don't get a lot lower and then have this positive configuration on the weekly chart setting up the rally. So we don't have it yet. It really looks like it could come. And that is a look at natural gas. The other was Bitcoin, is that right? And forward slash BTC. Now, Bitcoin, I've made no secret of the fact that I've been extremely negative on Bitcoin. And it's not only because I look at the technicals, it's because I look at the functionality, the utility of Bitcoin, and it doesn't compare to most of um, the other cryptocurrencies out there that have a function, that have a utility. For cross-border currencies, transfers, it's going to be everything built on the rails of Ethereum. Bitcoin doesn't have that ability. So anybody who's investing in Bitcoin is doing so because they think the price is going to go up. It's just a matter of that. It's a speculative vehicle. So when Bitcoin turned down over here on the weekly chart, it said it was likely to fall into this time frame, which it did. I thought it would get under this level and maybe even get down to this level, which is at around 74 or 75,000. But you can see that it's putting in this bottoming shape right over there. So that's why I'm forecasting up here that it's going to get up somewhere between 98,000 and maybe 109,000 before it then turns down again. So this, I would say, with the momentum turning up and this looking like we're now in these rising phases, the green dash is Ethereum, that it looks to me like the long side is the right side for the moment if you wanted to be a trader in here. Look over here at the daily chart, and you can see, well, this low came a little early, but not that early. And you see it pulling back right over here, but you have conditions in here that are beginning to change. So you see look at how negative this was and how the signals were telling you to expect downside resumptions and momentum. So it went neutral right over here. And if that's green, I can't see it because I'm colorblind. I think it's still blue. So it hasn't turned positive yet. But once that turned positive, I mean, we could expect there's the 100,000 level right over there. That 78.6 is at 104,000. So I could, it's realistic that we could get a trade to the upside here, up into that, over 100,000, not too far off. And you could see how I'm using this information where there are cycle rhythms, where certain things that are happening at certain time frames, and then the momentum is changing. That's all using this layers of information that we have. And I'm going to give you a good example of layers of information when I look at the stock market a little bit later on. So do I have anything more in the futures here? Da, 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 looks like I can do silver, and then I'll turn it over to you.
All right, sounds good.
Okay, this is the silver market right here. Silver is exploding again today. Silver has, everything that we look at has led the upside. It's been so positive. You can see right over here where it turned up last May, and it's been positive as far as momentum goes the entire time. You can see the cyclical rhythm in here. This is gold, and this is where they both bottomed. Then when it broke out above here, well, I was looking for higher prices. I was not looking for $80. So there's no way I could say that I caught the idea that it was going to get up that far. I just thought it was going up. And of course, everybody who follows me knows that I have been buying physical silver for years. So, of course, I have big profits on that, but I don't want to sell it. So that's the problem. So when do you ever sell something like this? You got to be, I want to maintain a certain share of my overall investment equity. And I wish I had bought more, to tell you the truth. So it's just super strong. There's a minor cycle right over here that comes down into February or March. I would expect that it would curl over at some point here. This fib extension right over there is at 82. It got just over it twice. It couldn't hold there. And then the next one up here, this is the 161.8. This is called the golden fib extension right over there. That's at $88. It's pretty possible it's going to get there. And if it's not in this cycle, it's pretty likely it would be in the next one out into Q2. So this is really bullish when you look at that. And here is, when you see the shorter cycles that are in here, this was completely swamped. In other words, that upside momentum would not allow a correction in here of any significance. The same thing is going on right over there. I'm just going to duplicate that because this is very swamped right over there. Momentum super strong. I'm looking for like a little dip over here. Maybe I was hoping it got back down here and under the 74, maybe the 72 level, so I could step up and buy some more, but it doesn't really want to do that, does it? You have this little double top here. I'm thinking it's going to pull back again over the next week and, maybe not give a whole lot of ground in there and move up again. I'm also afraid that that little low right over there at 73.5 is the low that came early. So this is just super bullish when I look at that. Look at let's go back right over here to the daily chart for a second. Look at the slim ribbon PO. as each of these signals said to you, upside momentum resumption, upside resumption, upside resumption, and then again here, upside resumption. It's very hard to get anything what looks this strong to move much to the downside. So you see we're running out of time here, and then it's going to move up again. So if you're shorting this because you think it's crazy overpriced, you're really setting yourself up because you're fighting the market. You're putting yourself in a very low probability situation. If there's anything that we do is we try to put you in high probability situations. I mean, that's really maybe the core of what we do, is to look for this probabilistic analysis. How do you get on the right side of the impulses? Well, looking at these charts, you could see it would have put you on the right side for the upside impulse. It doesn't mean it would happen, but that's the probability. So that's why we do the kind of analysis we do. And I hope that was very clear to you. I'm going to turn this over to the team so they could then take over.
Okay, let me share my screen. The first one that we're going to look at is Disney. And Disney is just a couple of weeks off of its intermediate weekly cycle low, about 7 weeks, and starting to move up. You can see the wicks on the top of these candles. I'm not really excited about Disney. I'll show you the long-term chart in a few minutes, but it could possibly, we've got earnings coming up, it could possibly make an approach to these levels of that prior cycle peak around 125. If it wanted to really improve, here's the intermediate 61.8% extension at 130. And we've got momentum that's curled up so far, not really impressing to the upside. Over on the daily chart, here was that corresponding intermediate and short-term low, made a nice move up, had a retracement, and now it's just kind of moving sideways. You can see how flat the reversal scout is here. Just for fun, let's go and take a look at the monthly chart, and you'll see why I'm not really excited about this. There was our monthly low, and this just momentum moving back and forth, up and down. And we've got a timing window that's coming out in just over a year from now. So this is going to have to do some work before it makes me think that it can get up into this area up here between, let's see, bottom of this is 126.21. The top is 155.5. Let's take a look at Tesla. Okay, this is the weekly chart of Tesla. We had a nice move up off of our intermediate low. Again, we're about 7-8 weeks off of that low. We do have positive momentum. It is starting to curl over a little bit. This retracement here corresponded to a retracement that I'm going to show you over on the daily chart. So expecting a move up now on the daily chart, and would project perhaps being able to take out these prior cycle peaks again, and get up here to about the 512.5 area. Here is that retracement that came right on time over on the daily chart. We got down to the bottom of the support zone, and just having a couple days on the upside now. So if that is the low, which it's a little bit too early to tell, then this should start to be able to do better. And we still do have negative momentum. So we want to see this reversal scout return to positive, as well as the slim ribbon. Over on the monthly chart, you can see that we are just towards the peaking phase of that cycle, and projecting up over the course of these next quite a few months to perhaps 518.22, which is the 76% extension. Then up here, 600 would be the 100% extension if it really starts to take off. So still fairly early in that cycle. We don't have the timing window until beginning of 2027. And another one that I was going to take a look at was Palantir. Let's go over here. So here's the weekly chart of Palantir. Again, 7-8 weeks off of that intermediate cycle low. This one stalled out at the 78.6% fib. retraced down into the middle of the support zone, and now starting kind of a sideways movement here. You can see our projection line. It's going to have to do some work before we were convinced that that should be raised. And I'll show you why over on the daily chart. So here was the daily cycle low formed just a couple of days ago on the 2nd and moved up, stalled right there in the top of that resistance zone. And now again, just moving sideways. This is not really doing what I would expect it to do, considering the phase of the cycle and also where it is on the weekly. So perhaps this just moves sideways. I'm watching this because it has negative momentum. So negative slim ribbon, negative reversal scout. I would not be anxious to buy this one right now. A couple of requests that had come in on Discord yesterday for long-term charts of IWC. IWC is, there we go, microcaps. So here you can see we've got a large dominant 48-month cycle that's broken into minor third cycles. Those are pretty clear. You can see some of them are clear here. This one was just a sideways movement. This one had a good retracement, came down when all of the cycles came down together. Again, just a sideways movement. This one came down nicely. So here was our first minor third cycle, very strong move up. We are expecting a trough for the second minor third cycle out in the later summer, perhaps July through September timeframe. And then we could, depending on what kind of a retracement we get, we could see higher prices. But for right now, this is showing no sign of any kind of retracement, just very, very strong. Let's take a look at the weekly chart of this. You can see this big move. Here was the retracement as it formed the weekly cycle trough, moving up again this week, also very strong. This cycle does retrace into July. See that time is 7/12/26. That's the ideal cycle trough. So this could give us the trough of the minor third cycle here on the monthly chart. But so far, there's absolutely nothing indicating that we should short this or be anything but a buyer. Very strong positive momentum. And the other one that was requested was askWX, which is medium and large cap stocks in companies that are not US companies. So you can see here is the monthly cycle. We've got 28 months and we are moving towards that peaking phase. The next level up is 73.34. That's the 127.2% extension. This has very strong momentum as well. Timing windows due to begin in May of next year. On the weekly chart, we've just several weeks off of an intermediate cycle low. This was a very shallow retracement moving up now towards these levels. Nothing here says anything except to be on the long side. So those were my charts, and I will hand it over to you, RV.
All right, great job, Katie. Well done. Let me go ahead and pop over the screen here. You'll take a look at Apple first, which is actually in pretty bearish pattern. Let's give it a second. All right, it should be loading here. So let's pull up the weekly chart. Weekly chart, you can see this one, this formed its high right there. RS has now moved down. Okay, so we have a trough that's due. Again, somewhere around the end of Q1 2026. A lot of lows due somewhere around there. In the interim, if it tries, oops, that is way too big of a, I don't know why that happens all the time. Give me a second. If it tries to move back up at all, we'd look for it to really move back down. That is really, really the highest odds at this stage of the game. So watching for a short side opportunity here, you can see really clear. Left shoulder, head, right shoulder, head and shoulders top with an area down there around 240 if it wants it. In the interim, you can see we have also lost this old low, right? So we're in a left-hand translation where the high formed early. We'll be looking for rallies in the interim to fail and for this to turn back to the downside somewhere into around the earnings date, which is right at the end of the month. Okay, so be aware of that. This is a name that is certainly on our radar to the short side for a higher odds play in our view. If we jump over now to Microsoft, another name, big time laggard, right? This stock used to be really good, and of late, it certainly hasn't been, right? We had a low here that formed, moved back up to the equal high, failed, and then lost the low. Okay, so this also has formed an early high, and now we are going to be watching for this to fail out of this move here, back to the downside, into also some around the end of Q1 2026. Another name that is showing that as having a low that is due around then. Okay. In the short term, certainly range bound. Okay, so this really needs to move through that area right around there. If that can happen, we'll be looking for it to see some follow through back to the downside. But right now, not doing anything, just holding sideways with a low. Somehow this got shifted a little bit with a low that's due also somewhere around the end of the month in Microsoft. Okay, so not good there. Jump over to Oxy, looking a little bit um, okay here, I would say. This one had a low that also was due. Chop it around, right? But we're going to be looking for this to move up a little bit into that zone right around here and just a little bit higher for now and allow it to work, right? Look at how weak this has been for years, right? This has got a ton of work to do to get on the overall long side radar for us. Right now, just let it breathe. Right now, you can see that there's a trough that's due also around the end of the, looks like around 129 is when that ideal trough is due. Look for a little bit of a rally, continue up a little bit more, put in that higher low, and if that can happen, then there will be likely a move to the upside that is still going to happen up there. Something similar to that overall shape of that move, right? Form that higher low, turn right back to the upside into the areas that I've drawn here on the chart for you. All right. Finally, we'll shift over to VRT. VRT is a name that I think is actually quite interesting. We had a low that was due. It formed that low, moved up, failed, put in a lower high. Here's your lower high versus that high. And now look at this. We have a series of lower highs and equal lows. Okay. So you have to be overall watching this area closely. If this can start to move back through these old lows, this would likely have an opportunity here to the short side for a move likely sharply lower. So that is something that I have on the radar. Also a low that is due around end of Q1 or so of 26. What's happening here is there is a short-term low due. We will be watching for that rally, but then again, does it fail early or does it keep on rallying? If it fails early and it loses that low, okay, then we would be looking for a move easily through these old lows there and then lower in VRT. If it can move back up, these are the areas up there right around the 61.8. Let me just hide some of these areas here. Okay. These are the areas here if it wants to, but watch closely. If it fails around there and turns down, that would not be good. If it moved up and out, then that would be good. Right. So in the interim, just in a holding period, and that's a look at VRT. And I'm going to hand this off to you, Slim.
Okay, great work, everybody. I have a couple more questions I'm going to answer, a few more. DJV is asking me about TLT, which of course is the 20-year bond. Wants to know if that made an early low. I'm not going to show the chart. I'm just going to tell you it might have actually. It's pretty close. It wouldn't actually be that early on a short-term basis. But look at the intermediate term on the weekly. It says a rally is likely not to get far and then fail. Also, DJV is asking me about the diamond pattern on the NQ. It looks most obvious on the weekly. And my answer is that it didn't quite break out. If you get above the high of today that we've made right now, and it's the same high a couple times in the last week, then it will look like a breakout to me. So it's pretty close regarding that. And then Roger asked me a question about the rebalancing in the Bloomberg Commodity Index, that's BCOM. They do a rebalancing, and generally what happens is that those things that did the best they move down they do some selling in order to get it down to the percentage that they want it to be of their holdings. And in the case of silver and gold, they've been by far the standout performers. So yes, they have listed how much needs to be sold. They do it over a week's time, starting today, January 9th. And that is supposed to put pressure on the metals. But look what they're doing today. So, basically what happens is that the people that really want to buy or need to buy, remember that hedgers need to buy. Those are the people that use silver. That's what's called a hedger. It's kind of different language than what traders use, where you buy something and sell options against it or some other like instrument and hedge it that way. In the commodity language, a hedger is somebody that needs to buy the commodity because they have a commercial use for it. In the case of that demand, it's really high. It's very strong. And also those that are just waiting for pullbacks. Well, today's a day where they expected some selling to come in, and it's not coming. So the buying comes in. And we may get some waffling back and forth over this next week as the rebalancing goes on. But I showed you the analysis just a little while ago. And that looks to me like if you get some pullbacks over the next week, they're going to be quite viable. Somebody's asking, DJV wants to know the symbol. It's BCOM, like Bloomberg Commodities, BCOM. So that's what's going on, and it might bring a little bit of selling coming in, but overall, we actually spotted the rounding bottom in there that took months and months to form, and talked about when it broke out, and that's really what's going on. And I think we're only in the beginning of a major commodity bull market. And that's because we have just a tremendous amount of spending going on in this government, and that's going to mean inflation. Of course, tariffs are inflationary, though we haven't quite seen that come into the market yet. So I think that we're going to see a huge move in commodities over the next maybe years. That's it. That's what I have to say. Anybody else has any questions of anything that we missed, you could send those over to one of us or to team@askSlim.com, and we'll be able to answer you on that. So we're closing our Q&A right now. All right, this is Matt's review of our services. This is the final weekend for our holiday specials, Give the Gift of askSlim and the Amazing Day Trader. I keep saying that because I think it's so amazing. So I'm going to turn this over to Matt, and he's going to talk to you about these last few days this will be available.
All right, thanks, Slim. Excellent work, team. It's always fun to watch the team do their analysis and listen to those reviews. Okay, as Slim mentioned, I'm just going to step through briefly the services available here with askSlim. You should see the homepage of the askSlim website. At askSlim, we offer several premium membership options with a focus on technical analysis services, trade planning tools, and education. I'm going to go over to our memberships area here. We have 4 premium core memberships levels. So we have a level 1, 2, 3, and 4. And then we have a separate standalone day trader service. And how this works is that as you go higher in the membership levels, you get more extensive technical analysis coverage in terms of the number of markets, stocks, ETF, futures, and then additional access to our charts and custom indicators, and then live trade planning tools. So as you get into level 3 and level 4, that's when you start to get access to the real-time information in terms of the trade planning tools like the market conditions monitor. And then when you move into level 4, you actually get to download and import the Thinkorswim Toss Schwab charts that you see us put up on the screen during these reviews. And those exact charts that we've done our work on are posted in our level 4 membership area with our chart grids that you can then import. So that is an amazing way to get your hands directly on the work that we do and see it live. So as Slim mentioned, this is it. This is the final weekend for our holiday specials. It doesn't get any better than this in terms of what we offer throughout the year. So if you were considering an askSlim premium membership or looking to upgrade, this is the best time of the year to do it. I mean, it's always a good time, but this is the best if you're looking for a little bit extra discount or give back. And that's what we're doing with these holiday specials in terms of our core memberships. So level 2, 3, and 4, you save over 35% with each one of those. And you also receive an Amazon gift card. So with level 2, the price goes from on average of $59 a month to $38.25, plus you get an Amazon gift card. And then with level 3, you would save from $119 a month to $77.33, plus a $50 Amazon gift card. And then with level 4, from $159 per month down to $101 and a quarter for a 3-month period. Each one of these is for a 3-month non-recurring special offer, which just means it will expire. We'll send you an email or two letting you know that it's going to expire and provide you with another opportunity to continue. But again, with each one of these, you get the discount, plus you get an Amazon e-gift card with it. And with level 4, it's a $100 Amazon e-gift card. And these are one-time non-recurring purchase. So you can buy it for yourself, and if you want to upgrade, or you could buy it for someone who loves or has an interest in technical analysis and wants to see an expert team that brings multiple time frames, momentum studies, and cycle analysis to the process. And then, as Slim mentioned, we have a standalone day trader service that we've spent years developing in hundreds of hours improving. And it's really a remarkable, comprehensive tool for those of you that are day traders, especially if you're a swing trader on the intraday. And so with the holiday special, if you buy 2 months, you get one free, and it comes down to about $89.90. So it's an incredible opportunity to see how essentially how we would set up our professional layout when it comes to intraday day trading, swing trading. And you get a free month with it. It comes with a combination of features. So I'm going to show very briefly those now, and then I'm going to do at the end of the show, I'm going to continue as the regular show expires, and I'll do a walkthrough, a more in-depth walkthrough of the service for about 10 or 15 minutes, but that'll be after the show ends. Right now, I'm just going to do about 2 or 3 minutes. So this is the day trader dashboard, and what you have is a standalone impulse monitor. This was a proprietary set of studies that Slim built with Arvi and myself, and we put together a way to monitor impulses. As Slim mentioned before, I think what we do better than anyone else, or we've put the most amount of effort into developing, is a way to get a sense of the directional bias for a particular outlook period, and then when are those next legs of impulse, right? When's that next move likely to happen, or is it underway? And that's what this tool is meant to help you with. This is not a buy-sell indicator. It's meant to give you a sense of when there's directional components, directional energies have a strong likelihood for an impulse, or one has already started. So with this tool, it is standalone again. And what I love to do is use my own intraday grids and combine it with this, and helps me get a sense of where the relatively strong ones are, and then where the weak ones are. And you can sort the bias right here. There's about 20 symbols included, so you can go from those that are strong to those that are weak. And today, actually, there's not a whole lot that's weak. Right now, at the moment, the weakest that we have is neutral conditions for the symbols that we track, which are very highly liquid symbols, mostly the most popular ones or highly liquid ones. And so right now you can see those ones that are in an impulse, or they had an impulse and now pulled back a little bit. And we have a tracker, a change log that lets you know when those changes occur. So this is a standalone tool. And then we have a replay system where every 5 minutes we have a tool that's taking a screenshot of the market conditions for our Trader Cockpit #1. So we do 2 live Zoom webinars of 2 different layouts, and I'm going to show the Cockpit #1, which is right here. So this is the replay tool. This is not live right now. This was yesterday. And what you can do is you can just fast forward 5 minutes at a time, and you can see the changes. So it's designed to help you get a sense of market conditions relative to our indicators and help you build your process around it. And you can see yesterday, as I go from left to right, you have the impulse monitor, then we have an 8-minute strategy setup that has a set of indicators on there. And then we have our 15-minute roadmap that includes these colored boxes or zones that give you a very, very, very important sense of where those key levels are. And when you have a level, when you have a yellow zone, which you can see here in the SPX, there's yellow zones in all three of the indexes, but they're going to be different. That lets you know that there is we call it the acceleration zone, where there's a high probability, especially when you have our momentum trend indicators, is the reversal scouts at two different time frames within the 15-minute, two different look back periods. When you have those in the same direction as the acceleration zone, there's a very high probability of a 70% or more of that acceleration zone to be captured. So you can see here it got down, cleared that acceleration zone. Interestingly, then if I move over to the NDX, got into a key intraday support zone, and then you would expect to see some reaction. So that's the whole purpose of it. If you're trying to capture, say in the SPX, if you're a scalper, 2-3 points, 1 to 3 points. If you're more a minor swing trader and you're looking for 3 to 7 points, or if you're looking for more of a major swing where you're getting from 10 to 15 to 20 points, this helps you get a sense of those zones where you're going to get likely reactions. And as I go then and fast forward a little bit, you'll see how you got this reaction very, very right where it's supposed to be. And this information is provided to our members before the market opens. So that's really important and impressive that you get this before the market opens. It's live during the market, and you can monitor the movements relative to these cockpits grids that we've set up. And you can see how much stronger. So it's a really great relative strength structure as well, where you can see the price action in the SPX, in the NDX, in the RUT, and if you really want to trade the strong of the three, you're going to get a very quick handle on that. We have the stochastic momentum index on the bottom. You can see, if I rewind this just a little bit here, how much stronger the Russell was yesterday very quickly. You get an unbelievable sense that the strength leader of the day was going to be the Russell. The other two were basically failing, and the Russell was already strong. The SMI was already positive, and then it just continued and it got through that first acceleration zone. And for some of you, that might be your day's over. You captured, I mean, this is an amazing move, 20 points in the Russell in 30 minutes. You might be done for the day and you're out and you're enjoying it. For others that are really trying to figure things out or want to play the more of a choppy period, and then you can look at the NDX, because that's what you got out of the NDX. It was incredibly choppy. So, and then we have other tools in here to help you get a sense of the price maturity of the move. We have what we call the trader radar, which ebbs and flows. You see like this wave-like experience, and you can see how the Russell was choppy, and all of a sudden the wave starts taking off to the upside. The bars start to change from pink to then green, letting you know the positive underpinning energy is starting to emerge. So, I mean, this is all about providing you with a sense of bias. You have to figure out what your position bias is going to be. So you're going to have great tools to help you with that. You absolutely have to know where the key levels are. And if you're not looking at key levels, you're going into the day blindfolded, because there are reactions constantly happening. And depending on your outlook period of scalping or minor swings or major swings, you need to know where those key levels are, and you need to know where the relative strength leaders are, because that's where you're going to get those bigger moves, those bigger impulses. You can see the impulse monitor, so it was turbo on, which means there's extra oomph happening, and that was in the IWM. So fantastic tools. This is cockpit 1. We have cockpit number 2, which is for futures traders, and you can also use it for the indexes, because we actually go down to another time frame, which is 3-minute grid. So this is a live look at cockpit number 2, and actually I have up on here it's ES. We have ES and NQ on there, and we go from a 15-minute to the 8-minute down to the 3-minute for the scalper. And I know there's a lot of information on here. I'm going to step through this on a walkthrough. But think of it in terms of the 15 minutes, more of the major outlook condition. Then you have the minor in the 8-minute, and then you have more of your scalper condition in the 3-minute, where you can really get precise with the movements and the candles that you can see. But if we look at here at the NQ, I want to go into the middle here, which we look at more of the windshield You got your left mirror, your right mirror, and then you got your dashboard windshield right here in the 8-minute. And then we have a line in the sand. I call this the line in the sand right here. And when you're above it, you have a higher probability of a more bullish condition. Along with, we have our momentum indicators, we have our trader radar, we have SMI on the bottom, and you can see the shift in the reversal scout here to positive. We get above the line in the sand, and then we have automated impulse and momentum alignment indicators. So this was an arrow. They're going to let you know when those alignments are coming into play, and you can see it here, here, here. I mean, it also tells you probably not a good idea to short. And it also helps with a risk, because when you have those arrows that point to the upside or the downside, you can always look at that candle before. If you break below it, it tells you probably something changed. It could be a little peak, or right here, this could have been a trough. Once we got above this candle where we had a downside sort of finale, then you got this move to the upside, and we're talking about a 150 point move. And again, when you have these days that you can figure out which ones are stronger and weaker, you can look at having, instead of just a 10 or 20 point move in the NQ, you can look at a 50 or 75. You can have that runner go even to 100, and we have breakout. You have a 4-hour breakout condition, a 1-hour breakout. I mean, this is really a paradise for intraday swing traders. And for those of you who want to learn how to day trade, these are the kind of tools you have to have so that you have all of the information as you start to make your decisions. I went a little longer than the 3 minutes, but as Slim said, it is something we've spent a tremendous amount of time, energy, money, and resource developing. And for $89, $90 for 3 months trial of this, you really are going to get a tremendous amount out of it. All right, Slim, anything you want to add to it, or anyone else?
Oh, I just want to say, wow. Great explanation of all that. I keep saying the more I look at this and the more I use it, I've never seen anything as good as this for intraday traders. In the indexes especially, that there is so much information in here. And again, as I said earlier, the key is getting on the right side of the impulses and to avoid being on the wrong side of them,
That's
because
right.
then you get that risk reward working in your favor. And that's the whole magic. You got to have bigger winners and more often have winners than the losers.
Right.
And the math just works. All of a sudden, you become the house in the casino, is the way I like to put it, because you get the math working in your favor. So I think it's the best out there. So they did a great job on that.
Excellent.
Yeah.
All right. So that's the recap of Day Trader Service and our holiday specials, which are ending this weekend.
All right. Absolutely super. I will take this back from you.
Sounds good.
All right. So we're getting ready to move on right now. Let's talk about the stock market. We're going to give you our analysis and projections. First, some important information. This just tells you about how we approach our analysis and about how you use our analysis, or whether you use the analysis or any information from anybody else, and the importance for you to be successful of trade ownership. I have that highlighted in there, and that's one of the keys. No matter where you get your information, you must own the trade. Then you'll be responsible, you'll react, nobody tells you what to do, and that's how you build your greatest skills. All right, long-term analysis and projections of the monthly charts. We're announcing again, the askSlim Investor Hub. Katie is the lead, and she is doing a fantastic job putting this all together. Katie, you want to say a few things about your input on this and what you think the value is?
Sure. I think that it's valuable because it can kind of give you context for what is happening on the lower time frames, if those are time frames that you typically trade, such as for swing traders. Primary focus would be weekly and daily. If you see something unexpected happening, I like to go over to the monthly chart and see, for example, in Home Depot, why is the weekly rally coming out of a timing window kind of tepid, for example? Well, it's because you're late stage on a monthly cycle. So that's an example. It can give you a lot of context. We have just updated this week all of the monthly charts that we follow. Those have been posted for our members who are doing the Investor Hub. And we've also got a new section on our chart grids page for level 4 members who can get direct toss links to those charts.
Yeah, it's absolutely fantastic. We've had a lot of people in the investor side that are interested in this, people that have longer term holdings. We have videos that we're building in there. All of my year-end videos with all of my projections for 26 are now in the Investor Hub. So for our members, level 2s, 3, and 4, you can now see those in there. We have trade ideas for investors and more, stocks, indexes, ETFs. This is a fantastic source of information for longer term holders, investors, the askSlim Investor Hub. Again, it's level 2, 3, and 4. Perfect opportunity for you to take advantage of our last weekend of our holiday special. And any questions you have, write Katie at askSlim.com.
Slim, I'll just show a quick look at it.
Sure.
That way that people have some context. Can you see the screen here?
Yep.
Okay, so here's the Investor Hub that Katie and Slim were describing, and I'm just going to go, there's a getting started video, a walkthrough that they put together. And then there's our main area where we have our monthly charts, and you can see the drop-down list of indexes, volatility, treasuries, currencies, metals, energies, crypto, sectors, subsectors, and the equities focus list. And go into the indexes, click on an index. You can look at the video analysis, and then you can also look at the monthly chart for the particular index or the particular symbol. Very easy, very intuitive to use. Go down each one of these to do the same thing. If there's videos there, you'll find the video analysis. And this was Slim's end of year review. And then as an example, I'm going to go into the sectors, subsectors, and equities focus list here, really deep dive into those key sectors. And it's basically a top-down approach that you can do. Go into XLK technology, and you can go into the chart, review the chart. So very, very, very helpful for those of you that are investors or active position traders. We've been asked to have something like this for years, and now it's here. So feel free to take advantage if you are a level 2 or higher member. And if you're not yet, and you do have an interest in those longer monthly charts and how that timing is so important, you now can become a level 2 member and get the Investor Hub.
All right, great. Good work showing that.
Yep.
Okay, we're going to move on, and we're going to look at the stock market. Let's just quickly have a little market brief right over here. The stock index, as we know, have gained ground this week, really led by small caps and cyclicals. And I'm going to show how you can identify that in a couple moments. AI stocks are mostly mixed. Overall, they lag the market right now. Defense stocks are soaring on President Trump's call to spend $1.5 trillion in defense through 2027. Another $1.5 trillion of spending. We have like 750 different defense installations around the country. We're still defending areas that we did from World War II. I don't know. I think the money could be spent somewhere else. Home builders, they're jumping because President Trump wants to buy $200 billion in MBSs through Fannie and Freddie. That's mortgage-backed securities, and that's $1.7 trillion more spending on top of what's already being spent on these deficits. If you want to know why the Fed is cutting interest rates and longer-term interest rates are going up, well, this tells that story. The job report that came out and shows weaker job creation. Unemployment rate was 4.4%. It was just a tick below what was expected. And the job creation is significantly slowing. It was only about 50,000 jobs for the last month. Investors expected the Supreme Court to come out with a ruling on Trump's tariffs today. It didn't come. So the market was up in the morning figuring that, well, if they end the tariffs, then the money is going to all get refunded to the companies. So the market went up. And then when the news didn't come out, the market sold down to just under negative. And then the buying came back because, well, we're in a positive period. So that news didn't come out. And the market, which at first didn't like it, Now the buyers are back. Indexes for the week, S&P 500, the NASDAQ, both up over 1%. The Dow's up over 2% now. They're also about 4%, and it gives you an idea about the rotation that has gone on and the fact that the Dow cyclicals, those stocks plus small caps are the ones that are leading the market now. I'll give you a little picture of that graphically in a moment. So for the stock market, what we're going to look at is the S&P 500. We're going to also look at the RSP, and we'll look at the VIX. Now, those of you that want to see all of our futures analysis on the ETFs and see the analysis on the NQs and the Russell and all that, well, RV is the master, and he does that Future Speak show every Wednesday where he really gives you all of that analysis. And now I'm going to take a peek in and look at the MCM, and we'll see what the conditions are for the different time frames and what the strongest and weakest stocks are. So that's what we're going to look at. Let's take a look here as we switch over to the S&P 500 chart. Now, the range that we have been in now for about 3 months or a little bit longer, you can see we're just getting to the top of it now and potentially breaking out right over there. And we have had these different upside projections in here, assuming that this rising phase was going to drive the market up right there. Now, I want you to see that there are harmonics in here that are quite nice. We have a 12-week, a 24-week, and a 36-week. And the 30, when they're all coming in here and correcting together, which was here and here, you had some sell-off. I thought this could be a bigger sell-off, but of course we were coming into this favorable seasonality, so it wasn't that big. It ended up to be around 6%, which was in the realm of what I thought would happen, though I thought there was a chance it would be down as much as 10%, but we didn't get there. And what I have in here is showing you these vertical lines. And these are important, actually, because you could see the 1/3 cycles that are in there. So how the dominant 36-week cycle is broken up with those minor 12-week cycles that are in there. And then there is another intermediate cycle that shows up. You can see the trough there, the trough there, the trough right over here, and then another one due over here. So when Arvi was going through the charts, Arvi and Katie, but Arvi mentioned some of the tech stocks that looked like they were going to come down into March potentially. Here's that March period right over there. So even though I think the market's going up here, I think there's going to be a pullback here into March. And it might be minor, it might be more than that. We don't really know. The real weakness, I think, and if you watch my year-end forecasts, I show that, this period in March, then this period in June, and then this period out here in August. It really says to me that from somewhere in July, August, maybe September, there's likely to be a very hard sell-off in that period. I just don't know about these other minor periods. So let's look at this section right over here. And I'm going to break it down in a way that's a little bit different. So remember, we do multiple time frame analysis. And within this weekly cycle right over there are smaller, minor 1/3 cycles. And then inside of that are even smaller cycles. So we're going to do cyclical analysis here a little bit differently than we have before. So if you look at this big cycle there, 36 weeks, that's this same time frame right in here, 36 weeks. And I'm going to do a little lesson in here so you can understand. This is a tactical chart. This is cycle layering, where what we're doing is we're getting information from the shorter term in order to understand the market condition and how that works within the longer term. So I'm just going to go a little further out in here, and you can see that I have this cycle right in here, and then that one there visible here. Now I'm going to blow this up for you to see how the information is valuable. If you look at each of these cycles on the daily chart, remember this is the weekly cycle, this is the weekly cycle. You can see that these were positively configured, each of those right in here, upward movements in each of those until you got over here. This was a negatively configured cycle. that warned me that there was a potential that there was going to be a corrective period. In this case, it rallied, made a double top, as you can see. And then when it broke underneath that minor cycle, there was a warning. And there was where your red arrow comes in telling you from the slim ribbon. And then when it gets under this cycle right over there, it really says there's trouble. And that's where it came down. So you had a minor negative cycle and a negative cycle right over there. When this was over with, when that timing was for the rally to begin again, you began to get these positively configured cycles. And each of them has a higher high, a higher peak. You can higher trough, each of those that you can see as those cycles break down. Now, let's look at what happened in here when this cycle was the timing was for the weekly cycle to correct, where that weekly trough is right there. It then gave you this neutral looking cycle as it corrected in here and had that 6% decline in the stock market. But the time ran out on the weekly cycle. As you can see right over here, that trough was due. So then it began moving up again. And where are we right now? Well, we're moving up, and you can see that we have this cycle completed. And I expected that December would be sloppy, and you had a sell-off before Christmas and a little sell-off here after Christmas, and then it began to move up again. Here is that cycle there, and now we're moving to the upside. What do I learn from this? Well, there's a key level right over here on that low, and that low is 68.24, 68.24.31. If it broke that, it would be a warning to me. If it broke the weekly cycle level right over here, and that lower there was 65.21.92, then it would tell me there are a lot of trouble. There's a lot of trouble in the stock market. Right now, all I see are things that are positive. Again, you have the slim ribbon PO giving you the positive signal right over there. And then moving to the upside, this is your option bias indicator. It says keep your positions biased to the long side. It went negative here for about a week and a half and then went positive again. You can see that right over there. And look at it as this market was going up in these positively configured cyclical patterns. The option bias indicator was green the whole time, and the slim ribbon PO continually gave you signals of momentum to the upside. Huge value in using our indicators and the multiple time frame analysis. So this is a cycle layering. This is a tactical chart. I don't show this very often, but I look at it pretty often. Of course, any of our members that have questions on that, you can write to team@askSlim.com. This, of course, we're going to be keeping our eye on. Are we going to keep getting the upward formations like we have right over here? Or are we going to get the breakdown and all of a sudden momentum conditions turn negative? Right now, it's saying be long. And the stock market is telling you be long. Now, we were driven on the upside by the NASDAQ, by the big caps, the mega caps, the stocks that everybody had to have because they're AI. That was driving the NASDAQ to the upside. But something has changed. And Avi and I don't know how many times we've said this. There's a rotation in the market that is holding it bullish. And if you can get the weakening in the tech stocks and then the money moving into other sectors, it will keep the bull market alive. Now, I've been very skeptical because of valuations, but the information has kept me bullish. And that's what we do as agnostic analysts, is we use the information as it comes to us. So this chart here is the NASDAQ's on a daily chart, and that's on the left. And this is the RSP on the right. This is the equal weight S&P 500. You can see as the market was moving up here on 1029, the NASDAQ made its peak. It hasn't gotten up to that level yet. And DJV asked me, do we have a breakout yet? I don't think so until we get up above this level, which is 25,812 approximately in the NASDAQ. Look at what happened here. See that 1027 peak? That's the same peak as right over here, but this has moved up very sharply, and that's the rotation. As long as you have the conditions, whereas the equal weight is stronger, or you're getting like this week where the Russell's up 4%, but the Nasdaq's only up 1%, then you see what's going on. Where we have conditions that are going on under the hood that essentially are saying that investors still want to put money into this market, and that's what they're doing. They're just finding other stocks to do it in. A lot of the tech stocks look like there's going to be some continued sizable declines and failures into that March timeframe. You can see here that you really don't want to be long the NASDAQ here when you can be long something that is broader like the RSP or some of the small caps that are maybe mid caps that are giving you a much better picture. So I wanted you to see that. That's really so important. Looking at that and teaching you about this cycle layering and how I can look at the market in a way that very visually tells me key levels, key shapes, and what the conditions are. And when you look at momentum, you look at the conditions, you look at these cycle layering configurations, as we call them. It gives you a full sense of really understanding the market, and the market right now is remaining bullish. Now, for how long is that likely to happen? Well, let's take a look at the VIX, which has some messaging for us in there. And this is the VIX weekly chart on the left. This is the VIX daily chart on the right. So what I'm getting in here based on the shape of the cycle on the weekly chart, let's just look a little tighter in here. This comes out somewhere into February. Now remember, we're looking for a decline into sometime in March, maybe April. So based on the charts that we're looking at in individual stocks, this is telling me that you're likely to have continued strength into sometime early to mid-February. When I look at that, when I look at the daily chart right over here, that trough right over there is January 27th. So the next trough out over there is March 2nd. I suppose that it's possible that the market stays strong until through the end of February, and then March into April is where the hardest sell-off is. But this gives me an indication, looking at the timing in here, that if the market does get some sell-offs now, they're likely not to hold. And we've seen that in the choppy conditions we had in the market today on Friday, as sell-offs came and then the buyers came right back in the market, with the S&P being up 30 and then all of a sudden to the downside and then up 40 again. So the buyers are still there. You can see here, looking at these negative momentum conditions in here, saying that it's likely the VIX is going to continue moving to the downside, and we can see that, and that's helping us understand the condition of the market. So that's a look at the charts I'm going to share with you today. I hope that you found that to be absolutely illuminating. Again, those multi-time frame cyclical layering charts do so much to really help you get a good understanding of the market. I think I'm going to have to put an addendum on that regarding the a cycle analysis workshop to look at that sometime. So let's take a look here as we switch over to the MCM, the Market Condition Monitor. We're looking at the intermediate now. This is for levels 3 and 4 members. So if you want to take advantage of our holiday special just this weekend that's left, you can get this on the intermediate time frame right over there. As you can see, I have it set up. They're very bullish. I mean, all of our algorithms in here are set up as very bullish. If I look at the short term in here, it's very bullish. If I look at for the near term, that means you're a swing trader for a few days. They're very bullish. So for those of you that are, intraday scalpers, that's the intraday right over here. And while the market's pulling back right now as I'm doing this, so they have gone to neutral, that's only available to the level 4 members, by the way. So that's very bullish. Let's look at the short term just to get an idea of the top stocks that are bullish or bearish. Here's the very bullish one, and you can see in here, as I pull down in here, we have Jets, SLV, of course, FEZ. The European stocks have been fantastic. FCX report, of course, in the copper and metals area. Boeing now getting a lift, of course, with all the money being spent in defense. Uranium, super strong because uranium may be the way that AI is going to be fueled. Martin Marietta, Kinder Morgan, Lamb Research, ITA, and France. Look at that. And Korea, all of those are bullish. Canada, you can see all of those are very bullish. Let's see the ones that are set up as very bearish. And you can see in here DT, Hewlett Packard, Zscaler, Fortinet, EQT Corporation, Datadog, ServiceNow. We did the analysis on natural gas earlier, so you could see that. Robinhood, very bearish. Autodesk, very bearish. So of course we have 300 and something symbols in here, so it really is extremely helpful when you look at that. So again, we go back to the indexes right over there, and if you want to get alerted for when there are any changes in there, you can just go into Notify, download our alert app, and you can have it giving you alerts right on your desktop. So right now, S&P 500 is very bullish, as you can see. I'm going to have it notify me in the short term when it's neutral. All I have to do that, and then it will notify me right on my desktop. And you can set any of the symbols that are on this to be able to do that. So that's a look at the MCM. And that is everything that I'm going to show you today regarding the analysis. But remember that there's a day trader special that we have. Matt showed you this earlier on in the show. You buy 2 months, you get one free. It is fantastic. Really, if you're a day trader, intraday trader, this is something that really is a great way to get you on the right side of the big trades, keep you on the wrong side. Keep you from being on the wrong side. Matt is going to do a special view of that just after this show, so stick around. And then the rest of our specials, all of this final weekend, and you can give the gift of askSlim. If you do a level 2, you get 35% discount. You get a $20 back Amazon gift card. Same thing, level 3, 35% discount will give you a $50 Amazon gift card, and level 4 will give you a $100 gift card after that 35% discount. Absolutely fantastic. Go to askSlim.com, top on the right there, and you can see our holiday specials. Click on that, you'll get more information. If you have any questions, write to Matt at askSlim.com. If you're brand new, make sure when you go to our site on the bottom right, click on Slim AI. Any questions you have, well, you'll be talking to my virtual twin, and he will, or I will, answer questions that you have. Don't ask it to do analysis for you, because it's not going to do that, but it'll help you with everything else that you want to ask about trading. And I think you're going to absolutely love what you see there. I know RV had to take off, so he's not with us. And so we still have Katie and Matt here. I think we're all done.
All right. Great job, all.
Yeah, super show. Thank
That
you,
was a
Matt,
great show.
Katie.
Matt is going to do a show, so stick around for that, and
Yeah.
have a great weekend.
Okay.
All right.
Thanks,
Take
everyone.
care.
Okay.
See you, Slim. See you, Katie.
Bye-bye.
Bye.
Okay, so those of you that are interested in seeing a little bit more of the day trader service, that's what I'm going to do. Let me just share my screen here. Up on the screen, you should see a slide that says day trader service. So this is Matt again with askSlim, and we're going to step through the day trader service, just doing a brief review of it. I mentioned in our live show that we would go a little deeper, and I'll do some live trade planning. So those of you that are still here, that still have an interest, if you have some questions, you can put that into the chat. Otherwise, I'll just jump into it, and we'll step through the day trader service. So first things first, I want everyone to understand what we have and where you access it. So as part of the day trader service, we have an impulse monitor. We have 2 live, what we call cockpits, and then we have a market replay system and then our resource area. So I'll go through each one of these and then we'll look at the live charts. The impulse monitor is a standalone tool, and what it's designed to do is pinpoint conditions that are optimal for larger price movements, aligned with our primary intraday directional bias studies that we've built into the algorithm. And we have a look at the indexes, And then also you can click all, and that will bring in the other symbols that we cover, which include Apple, AMD, Amazon, Baba, GLD, Google, JP Morgan, Meta, Microsoft, Netflix, NVIDIA, OIH, oil, got Shopify, SMH, TLT, Tesla, UNH, USO, XLE, XLK. So these are all great intraday traders. And this isn't a buy sell tool. This is meant to give you, again, a sense of the dominant directional impulse condition, whether one is unfolding or that one is already underway. And you just click on the sort up on top, and you can see the ones that are currently have an impulse on condition. So we look at either an impulse on or impulse off. If it's impulse off, it'll be red. Like right now, Shopify has a red impulse on, and then you have SMH, which is has a green impulse. And then when there's even an extra oomph of momentum, you'll see the turbo flashing that there is another set of momentum that is likely underway in that specific symbol. So this is a standalone tool that comes with the day trader service. You don't need any special software, just access to your askSlim account to be able to utilize it. And then we'll jump back over to the dashboard. We have a market replay system. This is a review tool that we've built. Essentially, what happens is that we have a piece of software that takes screenshots every 5 minutes of our live cockpit number 1, which is the cash indexes and index ETFs. So I'm just going to go back to yesterday's session here so you can see it. Every 5 minutes, so the market opens at 8:30 Central Standard Time. So somewhere around there, you'll start to see the screenshots building, and you can go screenshot by screenshot, 5 minutes by 5 minutes, and really get a sense of how the market plays out, get a feel for how our indicators work, look to establish an approach or a process for yourself. And it is a fantastic way to reflect on what has happened and start to build confidence around a strategy. Now, obviously, anything can happen at any moment in terms of the price action, but there are patterns that emerge, and you can utilize this tool to get a feel for your own process, your own approach relative to the tools that we have. So that is the replay system that we've built out. Then we have a resource area. It's a very, very robust resource area. We've done interpretation guides, playbooks for each of our indicators, our key indicators, and then also for our cockpits that we have available, the live cockpits that we run, cockpit 1, cockpit 2. So, and then we have training videos and webinars that we have completed. These are available here in the resource area. Jump back over here. And then we have these 2 live cockpits. So essentially, starting at, as it says here, cockpit number 2, which is our futures cockpit, goes live at 7:15 a.m. Central Standard Time and typically gets cut off at 4 p.m. And then we have our cockpit number 1, which I showed in the replay system. So I'm going to jump back to that replay system real quick here so you can get a sense of that. So we can walk through cockpit number 1, then we'll go live with cockpit number 2. So in the day trader service, if you wanted to see cockpit number 1 and number 2, there's a Zoom link right here. If I click this Zoom link, it'll take me out of the current Zoom I'm in. So I'm not going to do that. That's why I'm not showing that one live. But I am going to show you cockpit number 1 again and step through from left to right what is available in cockpit number 1. Just taking a second here to load up. All right, we'll go back to yesterday's price action. We'll go when the market opens. Our impulse monitor is on the left. We have an 8-minute, what we call Slim's 8-minute strategy here in the second area and segment. And then we have the 15-minute we call price zone roadmap in this third area here. So the impulse condition, I just reviewed that. That is set to kick in after 10 minutes because there's a lot of wiggling that typically happens in the first 10 minutes of the session. And that kicks in after 10 minutes. And you'll see that output. Again, it goes from a red negative to a green positive, and then you have some neutral conditions that are in the middle of that, different degrees of bullishness or bearishness. And this is, again, this is meant to give us a sense of the larger directional component, the directional energies, and whether or not there is likely an impulse that is on or unfolding. And so it helps you with your directional bias. So basically, if you saw that the impulse was on, you would not want to be looking for a long side condition unless you were seeing something that was just screaming at you. Maybe we're at support and you're going to start to take on a small position size. But for the most part, when you have an impulse condition on, that is a dominant directional bias signal or condition that's happening. You can also then step over into the 8-minute, and there's 3 studies that are here. So we have our reversal scout, which we call our signal line here. So this is when it's red, that's negative. When it turns green, it's positive. And you can see the difference between the IWM when the market opened relative to the SPY when the market opened. But you can get a feel for how the minor, we call it the minor. So you have a major condition, which we use different time frames to give you a sense of the major, 15-minute, and the impulse condition give you a bigger sense of bigger picture. Then you go into the 8-minute for more of a minor look, starting to get more tactical. And then in the future side, you can really get tactical with the 3-minute. So we have our signal line here. We call that with the reversal scout, a really nice, precise tool to give you a sense of that minor momentum condition. And when it's negative, again, we're trying to give us a feel for what do we want to consider for directional bias and therefore position bias. And if you have this negative plus the impulse condition negative, right now at that moment, there was a stronger downside condition happening. And then we have our trader radar, which is an indicator that acts as like a price wave, and it colors the bars. So you can see here that when it's pink, that's slightly bearish. And when you get into the deeper reds, then it's going to become bearish and very bearish. And then there's some warning signals on there, transitional signals as the market might be starting to shift or consolidate. And you could see that here we had a yellow warning. So you went sideways for a little bit. Then you went gray, which warns of a potential consolidation. But the momentum indicator was still negative. We were below our key 3 EMAs here that we use as part of the slim ribbon. So we bring those in so you can get in an instant, you can tell, are we above or are we below those EMAs? And we were below those EMAs. And essentially you can use then our price zone roadmap to get a feel of, are we hitting key support yet? That's really important, is getting a feel for where those key support resistance areas are. And if I fast forward here, we'll start to get a feel for things. So we entered into that key intraday support zone for the NDX. And as I said before, if you're, an aggressive trader who is looking for, early entry opportunities, you got to be monitoring time and price. And by time, I'm talking about, as you look at the price wave here on the trader radar, you're really starting to get these low bars, which tells you that the selling is strong, but might be starting to get diminished as you get these lower bars that start to show. And especially once you get a yellow bar, that starts to warn that things might be shifting. So if I fast forward here, if I'm watching the cues, there's really nothing here telling me outside of testing that support zone. That's important to do in terms of if you had a short side position on, you definitely want to be paying attention to when you're getting into key support, key resistance zones, giving you a sense of what's the maturity of the move. If you don't know what the maturity of the move is, then it's going to be really hard to gauge when you want to take some off, close your position. This really gives you that a sense of that picture when it comes to maturity of the move. I'll just keep going here, fast forward a little bit. We took a little bit deeper into that key support zone, got all the way down to the bottom, the bottom end of that key support zone. And you can start to see the SMI looks like it's going to curl over. That's another way to get a feel for the maturity of the move is, are we at the top side of the SMI? Are we near 75, over 75? Or are we getting on the bottom side of the SMI, which means you've probably used up a lot of selling pressure. Doesn't mean you can't continue in a very overextended, oversold condition, but it does let you know that a lot of the move has already been used up. So when you have the combination of that along with key support, then you have a good feel for where you are in terms of the move, and you can see how it shot up. You walk away from your desk thinking you've got one heck of a great trade on, to the downside in the Qs. Next thing you know, it turns and moves about 100 points in about 7 minutes. So this, if you are a day trader and interested in day trading, markets move incredibly fast, especially when you get into reaction areas. When you get into those reaction areas, you better be ready because the market will turn on a dime. And a lot of times, if it's going to resume back into a more dominant direction, it's not going to give you another chance. So having these kinds of tools are incredibly helpful to give you that preciseness of where you are in these moves. I talked about, if you were part of the audience in the earlier part of the live segment, this is a great grid to help you with relative strength. And you can see here, I'll go back to, let's talk about 9 a.m. Where were we? Well, even earlier than that. When the market opened, it was very clear that the Russell was the strongest of the indexes. Now let's look at our indicators. So we have two reversal scouts on here. We have our reversal scout fast and our reversal scout slow, and they each serve a different purpose. You have more of a dominant momentum trend, and then you have your smaller, fast momentum trend that it is happening within the broader context. If we look at the Russell, so the Russell opened, it was around 20, 25, 68 or so, and then it started to show immediate strength. Both momentum indicators turned up, and you can see there's labeling up on top, and this is dynamic labeling that will change as conditions change. And these are tuned. We have an algorithm that primarily focuses on, it's a proprietary set of indicators, but it primarily focuses on our two reversal scouts on the 15-minute along with the SMI. So we're trying to give you a sense of what's that dominant directional condition, because at the end of the day, there's the higher probability that if you're with the dominant condition, let's call it the trend or the momentum. If it's trend, then you have higher highs, higher lows if it's an uptrend, right? And you have time and price on your side. And that gives you the higher probability of your trade, your position working out, in your favor. So again, you got the two reversal scouts turning positive. We are still negative here on the other two indexes. So clearly, based on momentum indicators, just the price action itself, along with the SMI, which has a raw value. So you have a raw value here of 6.8, and we are so far down into the SMI. This is a 75 marker that we are below that. But it's extremely clear that the strength was coming from the Russell. Now let's fast forward, and you can see that it gets into this, what we call acceleration zone. This is a yellow zone. We call it acceleration because there's a high probability that you're going to, essentially it's like a void. There's a price void, a vacuum. And when you have momentum on your side, you're likely to see an acceleration through there. Again, you've got to be, as a day trader, intraday trader, markets move incredibly fast. A 15, 10-point move in the Russell, when they happen, they're going to happen fast. A lot of times the Russell will correct on a larger move. Sometimes it gives back a small 23.6. But many times it'll give back 50%, 61.8, 78.6, almost the whole move. So you've got to be prepared. It's really important to know where those key zones are, especially if you're a scalper or a minor intraday swing trader, not someone who's going to say, you know what, I'll sit this out for a few hours or an hour, hour and a half, 2 hours, because I'm very confident, even though you have no idea what's going to happen in terms of the market can do whatever it wants. Some news can come out and it blows up the position. The bottom line is, if you have that kind of strength, there's a higher probability that over the course of the next couple hours, you're likely to retest highs or break out the new highs. So if we continue, you can see how the Russell just really led the day. And I think it helped the other ones not fall apart. And then you start to see a turn happen. And you'll see that turn happen in the SMI. You'll see it in Trader Radar. It'll start to shift for you. And you can see the prior coloring of the Trader Radar was deeper greens relative to the lighter pinks. So a lot of times when you have a major breakdown, the Trader Radar will go dark red, or when you have breakouts happening, it goes dark green. So it's also helpful to see the past conditions in there. There's a lot of context that it gives you. For some people, maybe it's not helpful, but I can tell you the waves really give you a feel of peaks, and then they give you a sense of when things are extended. You get the yellows start to come into play. You get the lighter green, then another yellow warning, and then you get into the pinks. Now, if we fast forward, you'll start to see there's a little gray peeking its head up. You got this SMI that turned up. So that lets you know this is an important near-term low that had formed, or intraday low, I should say. And you can see the Russell just kept flying. So bottom line is, this is cockpit number 1. I couldn't show it to you live because I'm doing Zoom right now on this computer, but I wanted to step you through it. This actual review system that we have here is something, the replay system, that you'd be able to access on a regular basis. You just go back to a specific day and you can look at how those days play out. It's an awesome tool. We love it. We put a lot of time and energy into building it. And that would be cockpit number 1. I'm actually going to pull over for you live cockpit number 2. Let me just find it here. That's not it. Okay, here's cockpit number 2, and it's live. So with cockpit number 2, this is what we call our futures grid, and this is running on Zoom. So on Zoom, how this looks, and right now we're getting a nice move happening in the NQ. It started, and I'll come back and I'll talk about this, but we have the 3-minute in here, so that's more of your precise scalper view, or your tactical view of what's happening. You know, we really zoom in on that price action, and it's very, very helpful to get a feel for what's going on. And yeah, I'm just watching this develop here a little bit. Okay. Just want to set this up for us. All right, I'm going to pull over. I did a couple slides here. So this is cockpit 1, cockpit 2. I'm showing this to you because if you get the day trader service, you have access to that standalone impulse monitor. We're going to look at that again in a second, do some live trade planning. But then you also have access to cockpit number 1, cockpit number 2. From the Zoom link, you will be able to click on, at the top, there's 2 tabs. You've got cockpit 1, cockpit 2. It says cockpit number 2 over there, and then Matthew Serpy, that's me, camera, that would be for cockpit number 1. And then if you click the second tab, that opens up cockpit number 2. So that's how you can view at the same time, or independent of each other, but they're both right there. You can look at both of those cockpits. So if you're a futures trader, or if you're looking at the cash indexes, a lot of times if you're on the cash index and you're thinking, you know, what is going on? Why is the market stalling here, consolidating here? Whether you're not seeing it in the price zone roadmap, it is going to show up in cockpit number 2. I have built-in linear regression channels in the 15-minute major and the 3-minute minor. They are fantastic for those of you that are looking to capture a set number of points. And you're going to get those channels to work in, and they're dynamic channels. And you can see it here on the 15-minute here. It was up against one of the thinner resistant zones as part of the channel on the 15-minute. So you can, the equilibrium line, which I have colored blue, A lot of times you'll get a lot of chop that happens when you're in between the dashed line in the sand, as I like to call it. And then once you break out of those, you really get some good accelerations. And that's what Slim talked about before, that we're looking for are these key impulses, where in the NQs you can make 30, 50, 75 points in a matter of 15, 25 minutes, rather than fighting the choppiness, going, what is going on? How come I can't, I'm not getting any movement out of it? Well, this is really going to help you get a sense of when the moves are likely happening. Now, there's no guarantees. There's only probabilities. And once you learn these patterns, you give yourself a better chance to be profitable. And you try to pull all of the information together. So I talked about before that the left chart here, which is what we call the major chart or 15-minute chart, think of it as like your left mirror. It's giving you, in a car, it's giving you a broader, I'm sort of making this up in terms of if you had a left mirror that did one thing and your right mirror did another thing, and then you have your windshield that is sort of the in-focus view. You got your bigger picture view on the left. You got your tactical zoom in view on your right, which is the 3-minute. And then you got your 8-minute, which gives you a ton of information from that, I would say, the planning perspective, the execution perspective. Here we have that line in the sand. You can see it got choppy. The reversal scout turns up. You can see here where I'm just going to get where's my pen? There's my pen. So this was choppy in here. Really no good. And then you can see, though, that the trader radar started to get lower and lower, which that means that there's selling going on. But then you start to look at when the selling starts to almost disappear and the color changes. So we had a yellow that actually appeared down in here. You can see a little divergence happening in the SMI right there. So those are some warning signs. And obviously, if you're someone who follows a candle development, you can see that tail there telling you that, is there a potential transition happening? And then we get the switch from a negative reversal scout to a positive reversal scout right here. We get above the line in the sand, and then we get our breakout warning. And that it's going to happen earlier than what I'm showing here, because as soon as we start to get some clearance above the line in the sand with the momentum indicators kicking in, it's going to let you know that we've had a shift from a negative or slightly bearish bias to that positive bias. And this move here from about, let's say 55 to 82, we were talking about, that's 130 points in a matter of 15 minutes. So when the MQ is ready to run, it runs. And you really can take advantage of those opportunities, and you get a more confidence because you have the directional bias energy screaming at you that we have some bullish conditions going on. Up on top, we give you labels that tell you bullish. This on lets you know that there are the number of alignments. So it goes from on 1, 2, 3. And when you have once you start getting the on label kicking in either direction, that lets you know there's alignments and momentum starting to come into play. And obviously, when you have a new on 3, it's probably not a time I'm looking to get short, because that means that there was a transition from either neutral or negative to then that positive condition. And then, as if you are someone who follows pattern development, you're going to watch how all this plays out. And what I mean by that is we get this nice rally here. We got up into the top end of a linear regression channel up here. The SMI got a little overextended. We start to get that little pullback. And then you start to be prepared tactically for a potential next move into that next higher levels zone that we could get into. And you have the slim ribbon below here, these 3 exponential moving averages. The slim ribbon typically acts as support when you're trending. It acts as resistance when you're trending. And you can see how here we got into that slim ribbon. These candles held in the slim ribbon, and then we got our breakout again. And you get up into I have markers, and I'll erase this so that we can see it better. But these are markers for the highs and lows of certain time frames. This gold one here is for 4 hours, the 4-hour high and the 4-hour low. Why is that important? Well, you want to know, are we breaking out or are we breaking down, right? Or are we chopping around? So if we're chopping around, we're going to be stuck inside the 4-hour zone, or we're going to be stuck inside, I have a 1 hour and a 2-hour zone in here that will appear. And once we broke out of that 4-hour zone here, that lets you know that we're definitely in more of a bullish condition. Yeah, you can get some pullbacks, but you better be ready with closing those shorts out if you're inside of a condition where you're very strong and you want to play. If you want to scalp those overbought conditions, you better be ready to close those out as you get into supports, because when you're strong, you're just going to take off back up to the upside. So there's so much information that is tactical in nature. The markets are extremely complex. People ask, well, Matt, there's a lot on here. Yes, there is. And I've showed before that you have to think of yourself like a pilot. You have to think of yourself like a Formula One driver. Those cockpits in those are complex, but you need to be a pro. If you're going to be a day trader, you've got to develop into a pro mindset when it comes to your ability to understand market conditions in terms of bias, levels, where are we in a move, meaning are we in a new rising phase? How do I identify a new rising phase? Right here, SMI, divergence that occurred. Trader radar starting to really diminish in terms of seeing the selling. The selling was here to down to here to basically nothing. You can see that right here on the 3-minute. Then it starts to peek its head up. SMI starts to shift. You start to see bullish candles forming. You're on the bottom of a key regression channel. This is understanding where you are in the move, and then the move shifts. We go from a downside move inside of a dominant, larger trend, bullish trend, to now a potential new leg higher. So you have bias, key levels. Where are we in the phase of the move? Are we in a new bottom? Are we bottoming, new rising phase? Are we peaking phase? It's almost like cycle analysis, but we don't have the cycles on here, but I'm bringing that terminology because it makes so much sense when we are talking about other time frames. You can bring it into the day trader time frame as well. And then you have the maturity of the move. Even though we're in a peaking phase, is it fully extended or we got some room to go? And when you understand where you are based on key levels, it helps out a lot. So that's a look at both of those cockpits. And we have, again, cash indexes, and then we have the futures. And then I'm just going to wrap it up so that we can do a live look using like the impulse monitor. We do offer this setup, the complete day trader both cockpits, 1 and 2, in terms of what I showed you. You will actually get these setups. We only have 9 seats available. This is new from our askSlim Labs division that have built these out. Myself and Slim and RV, we built these, what we call our professional day trader layouts, and we do make it available to our members. If you have an interest in purchasing the Pro Cockpit, so what can happen then is you actually get this, and then you can change the symbol, and you can put any symbol in there you want. If you want to track gold, right? If you want to look at GC, you can put in GC. So you can turn 2 symbols into whatever symbol Thinkorswim offers, which are thousands of symbols, and you can become, you can day trade those utilizing our tools. Again, that is for our members only. If you're not a member yet, you can write to me, but we do try to reserve the seats for these Pro Cockpits for our members. All right, so now what we're going to look at are some other symbols, and we're just going to spend about 5 minutes or so, maybe 10 tops, and look at a couple symbols here. If anybody has one they'd like me to throw in, I'd be happy to take a look at it, and we can talk about the intraday tools here that we could use to try to dissect. Do we have a move that might be interesting to consider? I'm not giving advice. We're just talking generally from an educational standpoint, how you use these tools. And what I'm going to do, though, if I don't see any symbols come in, again, if you are interested, feel free to throw in a symbol. All right, one just came in. T-Row. Don't know much about that one, but we'll see what it shows. Is this one that you trade, intraday trade often? Just let me know if that's something that you do on a regular basis. but let's take a look at that one. Yes. Okay, cool. All right. So I'm just going to ask the question for the audience member who asked about T row. What is your typical outlook, intraday outlook period? You look at minutes, are you scalping, or are you looking at more of a minor swing, or are you looking at more of a major swing that you're trying to capture something for a couple hours? And while that person is a minor swing, okay, so, and in terms of a minor swing, how many points do you typically like to capture for that minor swing? So this is the kind of information that you want to understand for yourself as you think about your business model. I mean, literally, you need to become, if you want to be a professional day trader, which in my mind, that just simply means that you have a positive expectancy around what you're doing. You want to develop a plan and a model that gives you a chance to be profitable over a series of trades, whether those trades are, on a monthly basis, quarterly, annually. So 50 cents to 75 cents. Okay, that's helpful. See, that's great that you know what you're looking for. And just one more question, if you don't mind. Do you trade just the stock, or do you trade options on it, or do you both? That's another thing. Am I going to trade futures? Am I going to trade options? Am I going to trade the ETF? Am I going to trade leveraged ETFs? You can do all of it, but it's always good to know. Stock only. Okay. And do you go long only, or do you do both long and short? Another thing, am I going to be long? Am I going to be short? Am I going to be willing to go both ways with it? So that's another key question. Long only. Okay. So this is really helpful. I appreciate the input on that. So if I'm looking at long only, then for me, and the tools that we have, I'm going to start with the bigger picture. And what that means is I want to get a sense of the dominant directional components, and am I seeing long side opportunity? Am I seeing a bullish conditions, or am I seeing bearish conditions? And we're at askSlim, and especially myself, who's been trained by Slim, the focus of bias, the focus of trend, the focus of momentum, understanding what phase you're in is paramount. So going against the dominant conditions is something we rarely do. If we are, it's going to be because there's a predominance amount of evidence that suggests that a bottoming process is likely in motion, so on and so forth. So right now, I'm going to zoom out a little bit. See, I have the raw grid, so I can play with it however I want, and I can take a look at what's happening here. And what I'm going to do is just do some quick analysis of it, because this is what I would actually do with a new symbol. So this one's not one I've done before. So obviously, in terms of just trend here, we've had some higher highs over the course of the last 3 days, and not really breaking down much right now. We got down into, if I pull this up here, this is like the 38.2. So here's the 50%. So we've pulled back into the 38.2. We rallied, but we didn't take out that prior high. And right now the momentum is negative in my 15-minute reversal scout. The SMI is negative. My trader radar is slightly bearish. So although it is above my line in the sand, which helps me determine, do I really want to look at more long side or short side trades? And also it's above my equilibrium line. At the moment, we have a more negative, I would call it a slightly bearish bias in the 15-minute. Also, and I'll remove these, we are in our chop zone. So I pointed this out before. Here's our 4-hour high and our 4-hour low. We are in the middle of that. That is a dangerous area for a day trader in a way, because you can just get chopped up and you can get frustrated. So you want to be looking for, are we getting any breakouts, breakdowns? So right now I'm calling it slightly bearish in the 15-minute. Now let's move over to our 8-minute. And what I'm seeing here is we're choppy, slightly bearish. I would say slightly bearish in neutral conditions. I have some warnings here, some negative momentum warnings that are happening. The SMI is also right here. You can see it says falling, right? We have slightly bearish. That's why we have these labels up here, is to really help you. You don't have to think about it. You can just look at it. And what it does is it takes the emotion out. So I look up here and I say, okay, SMI falling, slightly bearish. I'm in chop mode. That probably tells me I don't want to get I don't want to have a very large long side position, or maybe I'm not even looking for long side positions yet. Okay. And since this individual said they only look at longs, this doesn't look like a great setup for me yet, where I'd want to be in the long side. And I'm happy with being patient. And if things can change very quickly. When you're a day trader, especially if you're a scalper, things can change in a heartbeat. Okay. But right now, I see this is very choppy over the last, let's see, you got 8 times 1, 2, 3, 4, 5, 6, 7. Last hour, this has been very choppy. You can see it says chop mode right here. We're right in between the 1 hour breakdown or 1 hour breakdown area and then the 2 hour. So that's an important thing. We don't want to see it, start having breakdowns. That's typically not good for your trending environment. And we have another label here, which is our power or strength meter. It's really helpful when it comes to a relative strength when you're comparing symbols, but it's also helpful to let you know, are we showing strength? Are we showing weakness right now? And there's a proprietary set of indicators that go inside of here. And this right now is showing a negative 28. So it varies between, negative 100 and positive 100. And rarely does it get above or below negative 80 to positive 80. So right now I would say that it's showing weakness. In the choppy mode, it would say choppy or anything below like 15. So it's weak. It's not extremely weak. So we have this, more dominant pattern here, which is still showing some positive tendencies and the shape of this pattern. But as you move into the middle time frame here, the minor time frame, it's very choppy, slightly bearish. Now let's go over to the 3 minute, my scalping area. And what is it telling me right now? Well, I'm just going to zoom out just a tad bit here. And you can see I like to be above. I like to be looking at being above the line in the sand here. I like to be above the equilibrium linear regression line. And I like to see the SMI positive to give me some confidence that I have some price action, some shape, some momentum behind me if I'm looking to get long. Now, right now we've got a couple candles here that are trying to hold their own, but overall we got negative momentum. And so I don't love it yet. What would I want to see? Well, I'd want to see something happen with price. The price is king. So I'd want to see, basically to get a higher high here in price, really to get over this candle, and then maybe on a pullback to see it accelerate through the line in the sand and then get back above the equilibrium line. Now, what's happening right here at the moment is we are seeing a little bit of buying come in. And if we did see a turn up in the SMI, that could tell us that we have a low forming. And if I wanted to, I'm not sure what this individual's position sizing methodology is or model is, but let's say that you buy in thirds, right? So you start with your starter position, which is your probe position, essentially. If I saw this get above this high here and really above the 8 minute high, because I can see the reversal scouts trying to turn up a little bit. So I'll just talk through if I wanted to be aggressive, which I want to see a little more action here, then I might get my probe entry in and I'd put a very, very tight stop. And I wouldn't care, if I lose, 7 cents, big deal, right? I mean, really a loss is just part of the process. And you want to keep our losses as small as possible. And we want to put our stops where they make sense. And when you're trying to feel out a position and you're dealing with not strong momentum or bias conditions, I want to keep my stops tighter because there's risk that these get taken out. So right now we're getting choppy. And if we get a push above, a little bit above this price action here, I could have a starter position on the long side. That's how I would be using this. The SMI is trying to curl over. You can see the reversal scout is, flattening out. It would be a small starter position with a tight stop. And then I would really watch to see if I could get some follow through, looking to add to the winner or add to building out a position where I have the structure that tells me it makes sense. And so that's how I would look at TROW. And then in terms of where would my target be, well, I don't have really a trade here yet. I mean, what I don't like is this candle here is that's a negative candle. A lot of times you work up against it and it's got to take time for it to play out, because that means there's some decent selling that came in here. There was some strong selling that came in there. And the other thing that I do is I'm a fib, I'm going to say it, I'm a fib expert, meaning that I've studied and utilized fib retracement extension tools for, more than 20 years. And I always want to know my levels. So what I'm going to do, and I'm going to do this live, is I'm going to look at these key levels real quick on the downside and the upside. And I want to try to get a feel for where my swings are. And you can see this candle is trying to form, you're trying to build a little base here. But this swing is important. If we can get above there, that would really start to build some structure inside of this overall picture. If we were to break down below this prior low, then that opens up the door to these next levels. If we can hold right here and we can turn it, then what I'd be looking at on the other side, because I'm always looking at upside downside. And again, this is not looking, this doesn't excite me too much, but I'm ready to pull the trigger if the price action tells me. Again, on the long side, it's going to be small, very tight stop. Okay, so I got a little pop here. If I want to do it, I would, again, I'm not giving you advice. I'm talking through how I use these tools. I would go long in my starter position, and then I would have a stop. Again, we're up against this candle here, but this is giving you a little bit of a buy signal. I don't love that we're inside of these other, the slim ribbon here. Typically, this is more negative than positive. But if all I did was go long and I had to honor a method, because this is overall positive shape, we're slightly bearish. I don't love it. I would be very small position right now. And that's just how I would operate with it. My targets on the upside, the first target, so this individual likes to look for about 50 cents. Let's see if I can even, that's a really important point. So can I even get 50 cents out of it, since we're in a little bit bearish structure? So this move here, if we were to get going, might get me back up to here. That would give you about that 50 cents. But again, this is overall weaker than stronger. And the only thing I would have had here is a small position, but there's risk. If we break down below that candle, you can see follow through the downside to those levels that I was talking about. Overall, this was showing more weakness than strength. You want to get above the blue equilibrium line and the line in the sand to really tell you have strength. And if you had a position, you'd only have been risked maybe 7 cents or so. And if you break out, then you have an opportunity. But let me just look again at that downside. If we were to break down, where I'll be watching for support to form. 107 to about 107.67 to 107.35-ish. Let me just see how that would match up with. I always like to look for fib confluence areas, zones. Okay, so that's nice. So it gives me a 50% here is close to that 78.6 extension. So I would say that there would be a pretty significant reaction if we got into that zone. So if I was short, because I go both long and short, now that we broke down, the odds favor a continued pullback. My stop would be above this prior high here, somewhere around there. But again, you're inside this chop zone. You've always got to remember that when you're in chop zones, you could just get chopped up. Now, a lot of these brokerage firms, obviously, they give you the ability to have, there's no commissions when you trade stocks, so that's helpful, right? But again, you're in, you're out, you're in, you're out. You could always make your stops wider. That's just something to be aware of. Then you have to think about what's your max risk, right? So if your max risk is whatever amount on a single trade, then you have to figure out how those shares fit into that. But when you're dealing with chop, see, it says chop, there's a good chance you get chopped up. So right now, that's what I'm looking at in T row. Choppy conditions, slightly bearish, trying to form some kind of base, but a little bit of risk to the downside. If we can get above the blue equilibrium line and the line in the sand, that could open up the door to a larger move, as we talked about. Okay, hope that was helpful to you. Now we'll look at a couple other symbols here. All right, so I'm going to go into, this is the impulse monitor. I talked about this earlier. The impulse monitor is a standalone tool that you can use. And why I'm going to use this to help me find some symbols that I have an interest in that we'll look at. All right, so SMH right now is very strong. Apple's actually strong. SPY, QQQ, NVIDIA. So let's go look at Apple and SMH. And, you know, if you're trading, you just keep your eye on the pattern formations. And once something finally sets up, then you know that you have a better opportunity. The SMI really never turned up here either in T-row. Again, very choppy. You can see how it's really, the candles have really compressed. And it's telling us up on top, you know, I always, if you want to go against it, you know, you go against it, but it's telling you that you should be thinking about the directional bias, your position bias more on either, you know, for this person, it's long side. So therefore I'm really not doing much yet. I really want to see the pattern structure, the momentum, at least tell me that it's behind me. You know, I've got the winds at my sail rather than fighting it. If he would have said that, you know, I'm looking at 10 or 15 cent trades, you know, that'd be different. But 50 to 75 cents, you do need to have some momentum and trend with you. Okay, so coming back to the impulse monitor, SMH, Apple, let's just see what those look like. Yeah, SMH has had a nice day, obviously. The process is going to be the same. You can see the shape of the linear regression channel here is the slope is extremely positive. You know, it had a little pullback. Now it's trying to rally again. But a lot of these moves are already going to be, you know, they're extended. You can see how strong today's move in SMH has been. So that would tell me that, and power is almost at 70. That would tell me that short side trades are probably not going to play out well. You've gotten barely anything to the downside here. All of the momentum alignment signals have been to the upside, saying, pay attention, new alignment, new alignment, new alignment. I mean, that's why we have this set up the way it is, so that number one, you're reducing your risk of going against strength or weakness. If you can prevent that, you can prevent a lot of larger losses and pretty much, you know, they're going to be lower probability trades. Where you get into trouble is when you're really in extended moves, even though the bias is still positive, but you're extremely extended, you're up against resistance, you know, things get very choppy. So the real meat of the move, you know, came earlier in the day. You know, if we do a fib draw here from the low of the open to this first wave or first leg, and I do a draw just to see, that's how I would be looking at it. We get this 100% right here. That would be a target for me. You got near that 78.6 and he pulled back a little bit. He came down into that first band of the slim ribbon, rallied up to the 78.6. Basically, it's gone sideways. It became what was resistance became support. And then we had another rally. Now, while all this is going on, you can use the more tactical 3-minute, and you can see how these shapes play out. You know, the pullback here, the pullback to that 100%, which was then on the third band of the slim ribbon or the 21 EMA, pull back to support, and then you chop, 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 chop. You got a warning here going back positive, some positive price action. The reversal scalp goes positive, SMI goes positive, and then you have a new move. Again, what are you trying to capture? 1 point, 2 points, 3 points. It's a great way to get with the momentum, and then you can get a read on where those next key, you know, levels are in terms of using the linear regression channels really help with that. Now we're up at that top end of the linear regression channel here. So this move is quite extended, but it's extremely strong in SMH. You know, what I'd rather be doing is, you know, essentially now we're dealing with end of the day choppiness that's come from very strong moves. It doesn't mean you can't have another one towards the end of the afternoon here. And if we did, you know, let me just take a look at where that could get some action here to the upside in SMH for the end of the day. So I'll be watching 390.50 as a new target as long as, so I want to pay attention to my key swing lows and highs. I'm going to move this a little bit to be more precise. That low is right here. So here's my key swing low. And there's a, you got some positive shape, bullish shape right here. We're very strong. So this would be where if you did pull back, you'd not want to see it get any, any further down or below these areas, because this is really where your shape for that leg exists. Pulling back into the slim ribbon again, pulling back into the lower band, this next band of the linear regression channel or the line in the sand. It's all possible. And then you'd watch for the new move in the SMI or the new breakout. Right now, Trader Radar is very strong, but also telling me that the buying is, it's not, I'm not going to say it's dried up, but a lot of it's been used. If you look at the Trader Radar, and I talked about how it's meant to give you a sense of the maturity of the move, right? Well, here was, if we look right here, this was like a low that formed, and then you see the price wave just continuing to rise. And that rising price wave tells you it's very strong, but also tells you that now it's getting very extended. And you can see that the SMI now has shifted to falling, and we had we're near a 15-minute breakdown. So that's where the low was from before. There was a breakdown. This is the 15-minute low, so pay attention to that. This is a little bit of a negative candle. I don't love it either way. I'm not really interested in shorting it. I'm not interested in going long at the moment. A lot of the opportunity was already been used up. You're welcome. All right, so that was that one. Now let's look at Apple, see if there's anything different. All right, Apple's had a decent move. You can see here, again, for me, we're getting more late in the move. So unless I'm a scalper, we're getting a little breakout right now. Unless I'm a scalper, I'm not, or maybe a minor swing trader. The major move really started, yesterday. And then today, as we tried to retrace, let's just see how far we got. We came down about the 78.6 here, and then we stabilized, and then really the opportunity that formed, and you'll see in my crosshairs was right here. This was a really nice opportunity that formed here in Apple, where the reversal scalp goes positive. We get above, in the your tactical zone here, right? You can start to see the candles. This is your buy signal. Strong buy signal candle comes with the SMI turning up. Trader Radar makes a low. Price wave means that the selling is likely drying up. Start to change colors, and you have a decent move. This move then was 257.14, and it was almost 2 points. So if you're someone who tries to capture a point and a half in Apple, that was a nice swing that we saw there. And what gave, we have a couple different signals on the 3-minute. Your starter position can come off the 3-minute. You break out above the line in the sand. You maybe go to half size position. You get the on alignment momentum signals. That the first one that happens is letting you know that there's a bullish momentum bias shift that just occurred here of multiple alignments. That was pretty strong. That tells you I don't want to be short because this is a new move. Here, SMI here, look at this. See the SMI, the fast, right? Let's just call it the fast, came over the slow, and this is not the time to be looking to be short. You've got momentum. You've got a lot of indicators telling you if I'm a short side trader, I got to step aside. If I'm a long side trader, I had some opportunities here in Apple, and again, we're getting a little bit of long in the tooth as we come into the the end of the day here in the next hour and a half on a Friday. Not sure what they're going to do. You might see it, one more pop, maybe a little pullback, and then another pop altogether with those that are strong. All right, last one I'll look at. We'll just go back to the impulse monitor. Again, this is a standalone tool. If you have your own intraday charts, it's a great reference guide to see what's strong, what's weak. UNH, okay, that popped into there, right? So UNH just popped in. Let's just take a quick look at what UNH looks like. UNH, yeah, I mean, if you're catching these, you can see it's breaking out above the line in the sand. It's peeking its head above the 2-hour, the 2-hour high, right? So this is a breakout, not breakdown. So I'm not looking to get short. You can see the SMI here is extended, but that tells me it's a strong move. This would have been the breakout trade right about here. So if you're following this closer, you know, this pattern here is similar to that T row that I looked at earlier in terms of, you know, you have more higher highs shape. I'm above my equilibrium line here. I'm inside of a upswing in the SMI on the major, and I'm starting to break out. So this could be a little bit of a pop. Where would I be looking for that one to go to? You know, if I was a swing trader on the minor, you know, you can see it's fighting the 38.2 right now. You know, and I mean, it's already had about a point move from the breakout area. So you got to think about that. If someone's day trading, they're you know, quarters, halves, 3/4 point, you know, 1 point. Once you have those happen, you can get into these consolidations. But this is a strong move. The next one on the upside would be around 345, you know, 85 ish. So that's where I'd be looking for on the upside based on. This is a retrace. So I always think about, are we in a retracement play or a continuation play? You know, and this is a retracement play off of this leg here. Okay. And you're probably going to get a reaction around that 345.85. Might not be too many sellers that come in until you get there. And I really wouldn't want to see it. You know, these candles here are important to me. But then definitely the line in the sand. So it all depends on what your stop is. If you're looking for, so what do we got here? We got 80 cents on the upside. And then if my stop was, you know, around 352, you know, what's that? You're a little better than 1-to-1, you know, maybe 1.25 to 1. If I had my stop down there, maybe you have right now, I think we're a little late on the entry, but you know, I wouldn't be afraid of the entry, but I think we're a little late on it. And you just can't be afraid if it pulls back here into where these last few candles have been, you know, we chop around in here and then try to make another move, or it breaks out, you know, which it's trying to do. And then my target is 345.85. Stop would be, you know, somewhere around 344.56. Or if I really wanted to have it tight, you know, it might be closer to this low. You know, I would probably do a retracement off of this low. But now that I'm breaking out, and if I had a position on, I would probably be looking to trail that and not want to get too much lower than, say, 344.85. And as you continue to rally into a profitable situation, you don't want to give your gains away. You know, in terms of letting your winners run, I always look at that. You got to be a lot more practical or precise with what the heck that even means, rather than it just being a buzzword. And you can see the pop that we're getting right now. So, you know, this is why these tools are so helpful. We had a line in the sand here. We had our 1 hour and 2 hour breakout lines, and it's trying to get above it, but not knowing where the retracement area is would be dangerous to me, because it could get up into near this and then pause or fail, or it could keep going. But you don't really know, and you have to make decisions. If you know, am I after that 75 cents, and then, you know, I'm out. So that's how you can use these tools. Again, it helps you with taking complex information. There's nothing simple about the markets. Look at this move here. I mean, anyone who says, I want this to just be easy, I don't think they've ever day traded. There's nothing easy about this. You have to make a lot of decisions, a lot of times very fast. But you got to do your homework first. You have to know, what do your setups look like? What do all the indicators mean to me? What is my sizing? When do I look to go? You know, if I'm someone who does, you know, I've been with Slim, I don't look at you're all in or all out. It's more, you know, my first position, and then you know, if you're doing thirds, a third, get your next, and then full size, right? So you have small, medium, and full. Maybe there's times where the market just tells you, you know what, I'm immediately into a full size position because it's setting up just the way it should. Fine. But that's how we like to think about it a little bit more. But you've got to know your bias. You've got to know what are my key levels. You got to know what phase are we in. Are we in a new rising phase? So this would have been, for me, this is a new minor rising phase. Okay, so we come off this is a bottoming process. We don't take out these lows. We're in a bottoming process. Reversal scout turns up. So this would suggest that the potential of a new rising phase, right? Or you'd call it, this is the rising phase. Right now, I would say we're still in a rising to / peaking phase. And, once you get closer to these key fib areas, then you're getting closer to potential peaking and then later maturity. But right now, this is more of a peaking. I'm not peaking. This is a rising phase. I don't think we're peaking yet. Maybe late peak or late rising. Anyways, you do these things to try to give yourself context. Otherwise, you might be jumping in on a trade when you're already in, let's call it peaking, right? And that's not when you want to be going long, is when something is extended, or unless you're a scalper, it's very different. But if I'm someone who's looking for 50 cents or $1, I'm not looking to get long, let's say at 346 after it's already run for a 1.5, and it typically only moves a 1.5 or whatever, 2 before then it contracts, right? And pulls back. So you also need to know the symbol you're trading. You need to know it like a customer, like you would your own kid, so you know its behavior. But with these tools, you really get really great insights into bias, levels, phasing, and maturity of the move. All right, so that's everything that I wanted to cover. Unless there's any questions, we're going to wrap up the segment. I went, longer than I planned, but there's always so much to talk about, and it's a lot of fun. And I'm glad that I had some questions and some of you that stayed along and got to enjoy a look at our day trader service. Someone had asked about CAG. Okay, I think this was. I don't know if this person was looking for the intraday trade. Olga, are you looking for the intraday look at CAG as for day trading purposes? Okay, I think so. Olga, if you can just confirm that you were looking for the day trade view, an intraday look at. Oh, for a few days. Well, that's not what this grid is really for. What I'm showing here, these are an intraday look. But I'll give you that really quick. So I'm going to wrap that up. That's the day trader review for askSlim. If you got questions, you can write to me at matt@askslim.com. Olga had asked about a symbol here, and so let me see if I can. This is another proprietary grid that we use. This is for near-term, short-term trading. So Olga, I'll look at CAG. So you're talking about the next few days. So, just at a glance here, what I'm seeing is that, obviously it's trying to put in an important low. It's coming off of a multi-month. I mean, this is a multi-month decline, and it has the shape of a potential important low. Is it going to go up the next few days? I mean, nobody knows exactly, right? But you're asking probabilities around that. And again, so what I try to do is break it down into really what am I after as a trader? And so what I'm after as a trader is a certain number of points, always, or a certain percentage of gain or loss, gain meaning profit, or mitigating the risk. So it's not really ever, for me, it's not about, is it going to go up or is it going to go down necessarily? It's more about, let's do the analysis and see if I have a tradable edge that I can capture a certain amount of points or a certain percentage of a move that translates into some kind of profit. And can I clearly determine my risk, meaning my reward, my stops, and what do I got? And so if I'm someone who's looking at just a few days trade, we've already had a large move in CAG all the way up to the 61.8. So typically this is where you start to get consolidation. So if I was, really following CAG for weeks and weeks and months, yesterday was a candle that you haven't seen in probably weeks and weeks and months. So typically, those kinds of candles do mark a potential change in trend. But if you're just looking for a few days of a trade, that's a little different, because you're going to have to remember that there's sellers out over here, or I should say maybe long holders and sellers who think that CAG's still got a chance to go down. Once you get into resistance, they're ready to sell again. So for me, this one came up into resistance. A near-term trade is, I'm not going to call anything is necessarily all over and can't go higher. But right now, from a near-term perspective, we rolled over on the SMI on my 15-minute. We're still negative on the momentum on the 2-hour slim ribbon. Reversal Scout's positive, and we're negative on the daily momentum. SMI is turned up. So I think this one could get choppy. What I would like to see is it pull back, consolidate, and maybe it pulls back into somewhere around 30, the middle of the slim ribbon here to the 38.2, the 50, then makes another move. And again, I have to ask myself, what time frame am I trading? What kind of points am I looking for? That's really the question you've got to ask yourself. In terms of a few days, like I said, we've reached resistance. So if it's not here, it's likely to struggle if it got up to the 78.6. Anything's possible, but what I'm talking about are typical price movements that bring out buyers and sellers. And buyers came, sellers are now coming a little bit. We have a little battle going on between the bulls and bears, and it's possible we could get up to that 78.6. So for me, it's really not about how many days necessarily. It's more about what's left in the move, and does it fit within the scope of what I like to trade for a profitable type setup. And I'm seeing resistance here based on the fib extension, fib retracements. Could chop around in here, and then the next move gets me to 17.19 to 17.38. Up there, we'll probably would see another pullback. If we take out, especially if there was let's call it a daily close below 16, say 15, that would open up the door to continued downside. That's where I would see key risk. Right now, this is a strong positive bull bar. So it looks like the bulls came in and said, that's enough for CAG on the downside. The SMI is turned up on the daily. But right now we could get choppy based on those resistance zones. Watch for that pullback, set up again, and then potential another rally. It looks like even, this could be a inverted head and shoulders that potentially forms, where you have, a shoulder here. You have the head down here, and then we come up, make another shoulder, come down, and then we have another breakout. So this one could take a few more weeks to develop. This could take a few more weeks to develop. If you're just a short-term trader, I gave you those levels to pay attention to. But right now, it came up into some resistance. Hope that was helpful. There was a question, if I'm a level 2 member, does day trader replace the level 2? No, day trader is a completely separate membership than our level 1, 2, 3, 4. Day trader is just focused on the day trader information. Level 2 is not part of the day trader membership. So it wouldn't replace it. You would be adding on to your level 2 membership. You would also get access then to the day trader membership. So I hope that was helpful. Olga, I'm glad that was helpful for you. Great. I appreciate everybody's attendance and questions, staying on after the regular live event ended. And I wish everybody a great weekend and great trading. Take care and all the best.